Alright guys, what's going on? Trout here. So, I thought I'd make this midweek update today. We're going to start off with Bitcoin, but we will be getting into the SPX as well. I was doing some weird, just boredom things this week, or I guess today rather, and I was kind of looking at 90-day drawdowns for Bitcoin. So, this cycle is a 90-day drawdown from previous all-time high, and it basically marked the bottoming territory, right? We're now in another 90-day drawdown here, and that looks like it's going to end around Sunday the 4th. I'm more opposed to say like the 6th personally, but 90-day drawdowns, regardless, are a common bottom pattern on Bitcoin. Let's put the dollar on there and invert it. Here is the dollar overlaid by Bitcoin. You can see an inverse dollar is usually good for Bitcoin, right? And Bitcoin has a chance to move up. Right? The dollar's been doing weird things, right? It doesn't look overly strong. What adds to this is what the yields are doing. What if the yields spike, like the 10-year and the 30-year, and how the Japanese yields are also at their highs, right? They're the highest they've been in a long time. You know, in COVID, for example, the dollar spiked and the yields dropped, but then the yields started rising and the dollar started dropping. Same thing here. The dollar went up and the yield went up. You guys remember when this happened and why this happened? Come on, you guys know. I know you guys have been watching the Fed stuff. What if there's a chance that the dollar nukes and the yields move up again? And I think that's possible because the dollar has looked weak, and historically a pretty weak dollar has been bullish for Bitcoin and gold, right? As for Bitcoin right now, we closed right at the yearly open, right at it. Pretty much bang on the money, right? Not much higher. Bang on the money. That's concerning. And the reason I said is that's a weak rally. And if we actually go on to something like the 30-minute calendar or the 30-minute time frame, at one point it was actually nearly at 94K, and it actually did breach 94K. But it instantly sold off. Like there wasn't any push higher. Like this should have been able to clear above and hold, right? Like it should have been able to hold above 94. One daily close at the weekly open doesn't signify anything. In fact, I'd actually argue that it's more bearish than it is bullish. We want to see a weekly close above this now. Now that we've at least gotten to it, can we hold a weekly close above going into Sunday at 4 o'clock PST? Or I guess, what is that, 7 o'clock EST? So PST would be 4 o'clock, 7 o'clock EST. Can we hold the Sunday close above this, right? From a VWAP perspective, we're just flirting with this 90-day, right? We opened and retested it, and now we're holding above. Are we going to get a hold above or not? The next target would be that 365 VWAP. Are we going to get it? I'm not sure. Right now, it looks like there could be an attempt, but I'm not the most confident in it. So, from another anchored VWAP perspective, the green is our cycle VWAP. This is our previous year value VWAP and our all-time high VWAP. There is a lot of compression down here, right? Can we get acceptance into up here where we can test that at 365 or the middle value of the previous year VWAP or not? We don't want acceptance into previous year value low at 88K like we've explained before, right? And everybody knows this. So if we split this ladder here, you can see that Bitcoin still has a ton of single prints down here, a ton of them. And I don't want to combine this yet, though technically we could. I want to see what happens going into the weekly close. So we're going to leave this split for now. But just mindful that there's a shit ton of single prints here that need to be filled. And from a composite range, the value area high here of the previous multi-day composite is kind of where we're floating around. And we're trying to get acceptance above and get into this composite here. But the value area low of this large composite is what's holding as resistance right now. Right, so again, we don't want to break below this yearly open and get acceptance into these single prints under the previous year value going into Sunday. right? You're in a very frothy zone, right? You want to try and target this point of control here for longs, but this might act as major resistance. But right now, this value area low of this previous composite is very bearish from a daily perspective. If we go over to the weekly on Bitcoin, it's kind of the same story, right? You're just trying to get above this yearly open and get acceptance out of this previous value area high range from November, right? And you want to try and get into these higher previous week composites. But so far, there's not a lot happening. We've explained the VWAPs, right? We know where our VWAPs are, right? Like we're trying to get acceptance above that 30-day, right? There's a very good chance you could just do some sort of look above and fail here on the weekly and come back down in a range, which is not what you want. So be mindful that things are in a weird spot for sure for Bitcoin, but I would really pay attention to how this week is going to play out. If you do not close above this yearly open on Sunday, the door to 78,000 is definitely open, right? So pay attention to what happens with Bitcoin here going into Sunday, right? You want to see how Friday closes and if we can hold above this yearly open, but more importantly, Sunday you want to hold above this yearly open. The next 2 days are the potentially most bearish days the SPX can have. You have to be mindful of that. There's a lot of single prints back here that need to be filled, and I have a feeling they're going to get filled next week. If we do end up breaking below those daily areas that I already explained, you want to start looking at if 84K is going to hold again, or if you're going to break lower into these single prints here on Bitcoin, right? You have some single print action here where you could fill around 77 to 78K. You have a little point of control here at 76. But these single prints down here are probably what I'd be targeting, right? Last thing I'll say here is the ADP non-farm employment change did spook a bit. There's a good chance this could support a rate cut. I'm still curious if we aren't going to rate cut in December, but might into January. Last thing for this week are unemployment claims tomorrow, and then PCE prelim from the University of Michigan on Friday. Next week, you're going to have ADP again. You're going to have JOLTS. I don't actually know if we'll get this because it is tentative, so keep that in mind. Employment cost, federal funds rate. This will be when you get your rate cut decision, economic projections, statement, unemployment claims for core PPI. So next week's going to be crazy. Okay, so whatever happens this week, I don't know. But be mindful that next week might get crazy. What's important to know, too, is every Thursday in the last bit of the sessions has been a down day. Minus, obviously, Thanksgiving last week. It wasn't open. And today was our first Monday in a while that we had where Monday was actually red, right? There was a red Monday, I guess, beforehand. But it's weird to see that shift now that Mondays aren't just gap up days like they've been, and Thursdays have been gap down days. So really pay attention to that VVIX VIX. Everything's going to come down to it. And yeah, breadth again is overextended. It did drop a bit and tried to support today, but we did still fail to break out of the range. So if this moves lower, be prepared that this might get weird. I want to move over here to the SPX real quick and just show you guys that we actually failed to break out of this range today and fell back into it. And this is the all-time high VWAP. We're still here. And I told you guys in the earlier week, or was it last week? It was in one of the earlier videos that this was going to be the fly range for the SPX this week. And we've been right in it the whole time. Rejection, rejection, you know, kind of building out whatever you want to call this here. What would we call this here? A pennant? I don't know what you'd call that. Right? Something like that. You don't want to see some sort of look above, retest, fail back in, right? That would probably not be good. So just be mindful that we still don't have acceptance into the upper range. You know, we want to get daily closes above. We don't want to fall back in. The scariest part about both these metrics is the VVIX VIX. And I said that around December 5th, and I've been saying this on Twitter, was probably when you're going to see the last bit of volatility compression. Meaning that that's when short vol is probably going to be up. If we come in here and we do something like this on the VVIX VIX, that volatility spike I've been talking about into the middle of December might really set up here for a bearish move. And I've said this before, I don't think the lows are in at all. Structurally, not even close. I think right now the normal pump trying to sweep some stops, some late longs, you know, shorts, whatnot, you know, it's swung the stops both ways. And I even tweeted on Twitter that we were going to run the stops both ways. So the scariest thing about this metric, and we've explained it before, is when the VVIX comes up, SPX comes down. When the VVIX goes down, SPX comes up. Right? So what's concerning is, are we going to get one of these crazy VIX spikes? And I'll be honest, I think it's possible. And I think now more than ever, it is possible. We explained on the last video, or sorry, one of the videos earlier this week, the Greeks. We explained that we're in a short hedging range. A lot of institutional short is up here. And the bearish line of the sand for the SPX is at that 60, 80, 20 level, roughly. Right? A failure to get acceptance into higher range this week will trigger that those long-dated contracts, like I said, are going to get IV crushed. Right? And it's going to put more downward pressure hedging on the market. It is a big battle right now. Big battle. We do not want to see acceptance back into our green VWAP down here. Right? That would ultimately be really bad. And more importantly, if we get acceptance down here, that's also very bad. You're in a very pivotal spot. And I've been saying this, I know I've been speaking to the herd for the last week. But you're now in the position where anything is possible. Right? Anything is possible. Are we going to make a new all-time high this month? Or are we not? And I've already explained why I think we won't. But I'll let you guys know that if this cycle plays out like the 90s, you're in for a big drop in December and a rally into January. Right? So be mindful of whatever happens here. You're in a very frothy move. From a weekly TPO perspective, there is a lot of single prints down here that need filling. A lot. And I think this is what retail's missing. Is this imbalance down here is not good. And if we break below that, that's a lot of downward pressure hedging. Right? Like a lot. And if you guys understand the Greeks like I explained, and you dive into it yourself, this could set up for a potentially catastrophic move temporarily. You know, the all-time high point of control there at 6.8, we're going to call it 6.860 just to use round numbers. It's exactly kind of where we rejected off today. The order blocks came up to 68.63, I believe it was on the chart. Right? We are right in that point of control zone. Big bearish line in the sand right there. Right? All right, it depends how you look at it. Bullish line in the sand, bearish line in the sand. But for the bears, getting above that is bad. For the bulls, getting below that is bad. Right? Be mindful of all this. And remember, single prints get filled. Right? These here came and got filled. These here came and got filled. Everything gets filled. Okay, let's not forget that. I'd be mindful that the door down here is still very open. And again, we haven't got acceptance above. We have not got acceptance above the previous all-time high point of control. Right? That profile here, we have not got acceptance above that. In fact, that's where we exactly stalled out today on the order blocks here. Right? The chance for downside to catch people off guard is very high. Is very high. That VVIX indicator I told you is right there. There's a lot of short hedging in the market. There's the Fed put, where if they, for some reason, don't cut rates next week, there's that. So we have to look at it from a Greeks profile, the Fed put, overall acceptance into value, what the dollar and the treasuries are sending. There's a lot of things we have to pay attention to. And I understand price looks bullish right now. It looks like it's inevitable. But there should be no reason that this week there could not have been an all-time high being made with how quick we made up moves in the last few weeks. right? Like in 1 week, we did almost a 300-point rally, almost, a little less than that, but there's no reason why it shouldn't go straight to 7,000. And those December 19th expiries, it's 2.5 weeks away. The time to make the move is now. And remember, I explained this in the other video. The further you pull away from that strike price, the closer you get to the date as well, it's only going to create more downside pressure. And that JP Morgan wall we explained about, the 7,000 wall and the short put wall, you know, there's a chance for a big open door lower. Okay, so let's just be mindful. So again, so this is the daily profile now. Still single prints down here. We have a nice multi-week composite, or sorry, multi-day composite here. We do not want to see price reject off the previous point of controls here, as it's kind of doing, and get acceptance back into this previous day composite. There is some support here, but if you were to flip this down here under that 680.20 level, I explained it. The value area low here is 68.14, but the gamma level is 68.20. You would not want to see something like this, right? And I'll be honest, right now, it's structurally, it looks weird, okay? Another thing we could dive into here, which we'll do in a second, is some of the S&P sectors as well as the IWM. And the IWM is really important and why I want to show it. QQQ now has the same setup, right? I talked about how critical it was to breach into that 620 level here. And we are above it right now. But we don't want to see some rejection here off 625. You know, a fail here to kind of hold above would be bad, right? We won't want to break down in this range because the next range you would target here would be down at like 604, right? There is definitely some weird things going on with tech. Nvidia is still very lagging. There's a couple tech stocks that have been rallying, but you're still in a weird spot, right? And we know Bitcoin follows the Nasdaq and the QQQ pretty closely. Maybe that's why it's up so much this week, but there's still a big issue in the market. I want to start off with the XLF here. You kind of got a weird head and shoulders pattern going on. It's not perfect, but it is kind of there. If for some reason this was to drop back below these estimated moving averages, the 10, 20, and 52, that probably wouldn't be a good thing. So just be mindful that if for some reason, and this doesn't have to drop very far, if you got acceptance below, that would probably not be a good thing. Same thing with the HGX here. If we for some reason just got a fake out here and drop below, that probably would not be a good sign. Mind you, they are holding above right now, but I would like to see a break of this previous range here. I would like to see like above it, not stalling out kind of at the lower end of the range. Like I want to see good acceptance above, not something like this where we break down, right? The XLV, same thing. This is the healthcare sector. Are we about to get acceptance below that 10-day moving average? It's kind of looking like it. It's trying to hold it. But you can see today, I don't know. That's a tough one. The energy sector here, again, trying to hold above. Hard to say. It's holding above. I actually think that this XLE here could set up a wicked breakout eventually. Like if you were to do something like this and get, let's say, this retest here into a breakout here, I actually think you could see some upside here going into January, and I do think that will happen. But again, if this sector sells off, that'll probably drag the S&P down as well. And it looks like it is kind of rejecting there. But this could be a really good trade setup. If we do something like this and then fill here and break out, that could be a really great sector to put some calls on going into Q1, maybe January, February of this year. The XLK, which is our technology sector, again, it's still kind of weak. You're not getting acceptance above, you're not getting acceptance below. It's very tight. If this sells off, it's probably not going to be a good thing. Even from an RSI perspective here, there's a chance for it to just kind of, you know, do something like this and come down, right? The XLP, again, it's kind of holding this, right? Is it going to do this and come down? We're not sure, but it is tight in here as well. XLY, it's kind of the same thing. It's actually, I would argue that this is probably one of the stronger ones. I don't want to see this entirety, you know, hold as like a resistance level, if that makes sense. XLRE, This is the real estate sector, and this is kind of why I was looking at HEX as well. This is still below. That's not good, right? There's been no acceptance to get into upper range. In fact, it's below all the EMAs. It doesn't look perfect yet. XLC, the communication services, it's kind of just been in this downtrend this entire time. I'd like to see how this ends going into Friday this week. So the last thing I wanted to cover here was the IWM. The IWM here, it's actually holding above right now. I would not want to see a look above and fail on this. If we look at the 12/19 expiry for the IWM, the puts are nearly triple compared to the calls, right? And if we go in here, the highest open interest strike is 250, and that's it really. There's a 260 strike and a 240. But if we come down to the puts here, the puts are extremely high, right? Like almost double the interest. And these are pretty low down puts, right? Like 230, like I was thinking 240 would be a good strike. These guys are bidding like 235, 234. So, like I said, if all these indexes and sectors really fuck off, like I expect them to, it's going to create like a very large divergence. I don't know how many people are ready for that. Anyways, guys, hope this video helped you. Drop a comment, drop a like. Let me know if you have any questions or anything you want to see. Yeah, take care, everyone.